Ladies and gentlemen, welcome to the big Amazon earnings call. Sorry, I was going to say Big Tech Frenzy. That's not what we're doing here today. So I'm using new tech. This is new streaming software, everything along these lines. So we're going to have to get used to the audio, the equipment, everything like this. So let me know how everything sounds, how everything's coming through. That's going to be of great help. The reason why we're doing this is for the main concern of putting the stock price on screen while also listening to the earnings call. Okay? So this software should be able to allow me to do both. So we can track these prices while getting all the information that we need and looking at the stock prices at the exact same time. So that's what we need. That's going to hopefully be the best viewing experience. As long as it sounds good, we're great. Okay, so first off, let me... I didn't realize how hot I was going to be in this sweater. Give me one quick second, and I will just take my sweater off real quick. I'm saving you guys from the horrors of potentially seeing my belly if my shirt comes up. Okay. And bang, we're back. Okay. So in today's live stream, we have Rocket, Western Digital, Striker, Riot, Atlassian, Twilio, First Solar, Roku, MicroStrategy, or now Strategy, Cloudflare, Coinbase, Reddit, Apple, and Amazon. If there's any other names that you guys want me to track during this live stream, we can absolutely do that. But those are the big names on the list, okay? But this should be a lot of fun. This is a huge day. The markets are absolutely taking a crap right now. Yeah, look at this. NASDAQ down 1.5%. This is a terrible day. Some people getting worried about some big tech earnings. Some people getting worried about the Fed. Overall, I'm here to see what Amazon and Apple have to put up. I'm a net buyer of stocks. I'm extremely bullish on the long-term future of American economies, of big tech in general. And I've constantly restated that I believe that some of these big names, including, Meta, which is actually selling off quite a lot, now down at a scary price of $666, is... I thought I bought the dip last night, freaking buying at $686. Here we are, down $20 a share. But this stock continues to fall on the, a couple things. One is the tax charge. One is overspending of CapEx. People are really concerned about that as well. I am not concerned about those types of things. Just because... Well, I think that artificial intelligence is what's leading them to get better rates on advertising. I think that's what's going to allow them to grow and distribute content to people more efficiently. More personalized content means more people are going to return to things like Instagram Reels and Facebook and all of these things. So it's spending, but at the same time, we're still seeing very high free cash flow rates. We showed this off last night, and so I am not overly concerned about the trends that we're seeing so far. So as this comes in, all right, I got to make sure that the times of all of these earnings as well for the day. Earnings for Amazon are going to come right as the bell comes out. Apple doesn't come out till 4:30. Okay. Coinbase at 4:11. It's going to be spread out a little bit. Reddit at 4:06. And then, for their earnings calls, we also need to find out when they do their earnings calls as well. Because if there's any overlap, or if there's any non-overlap, maybe we can listen to multiple calls at the same time. But I don't think that's the case this time around. I think all of them report at 5 o'clock. Either way, Amazon's the main company that I want to listen to. It's a name that I've been building up a position in. Doesn't mean that they're not going to sink. They could have a bad earnings day for sure. Amazon, if they end up coming out and saying, hey, you know what, cloud growth is not coming in as strongly as expected, and if it's under 20%, for example, year over year, that's going to be a problem. They're going to take a hit. So we will see. Reddit down 7.8%, 193. One freaking 93. We're about to break. Okay, so 3 months ago it was much lower actually, and then this was last earnings. Last earnings ended up making them skyrocket up. Is this earnings going to reaffirm that or make them drop down to the early $100 ranges? We'll have to see. I also, just for transparency's sake, am very much looking at taking a position in Reddit if they end up putting growth rates that were similar to last year's as well. I mean, we ended up seeing stunning results from Reddit last quarter. There were some Google concerns about whether that was going to sort of tear into their business a little bit. I don't think that's going to be the case this time around. But who knows? Bay in chat, Bay Area Elite said, I bought a chunk of Meta today. Yeah, I mean, it's hard not to, right? Like, they still ended up growing very well. Like, seriously, you need kind of a lot to show up for me to not like the earnings that we ended up seeing here. I'll show you guys what I'm talking about here. Okay, bear with me. If you guys are scared of the spend on Meta, make sure that you relook at, you know, how well they actually did on their revenue growth in their US customer. Here, wait one sec. Trying to find this new platform is a little bit tough to navigate. Bang. Okay. Whenever on Meta, if we take a look at their revenue and revenue change over time, like this speaks for itself. You know, total revenue continues to grow at plus 20% rates. This is a multi-trillion-dollar business. Okay. Sorry, I'm on this is annualized. I was like, why doesn't that look right? 28.28% over the last quarter. We can zoom this in. None of that's going to change anything. Extremely fast growth rates. $51.2 billion of revenue at high margins. If we end up taking a look at gross profit margin and then also operating margin as well, their operating margin is at 40%. You know what I mean? Like this is an insane business that's getting absolutely sold off on Mark Zuckerberg's ability to spend more on capital expenditures. This is what people aren't liking. But this is across the board. You know, they are in a prisoner's dilemma. Everyone needs to spend more. But they're seeing real results from this. This isn't like the AI era, internet era, where people were spending so forward and not seeing a return on their money immediately. Like, they're still heavily cash flow positive. I think they did $11 billion in free cash flow, Meta did. Let's take a look. Free cash flow. $11.1 billion in free cash flow. On top of them end up, you know, spending a lot in capital expenditures for future property and equipment. It's up to you guys on how you think about Meta going forward. But for me, I'm very much positive on this business so far. BMNR thoughts? I do not think BMNR is going to zero. Guys, the market's having a bloodbath day. This is not good, you know? Here, one sec. The Nasdaq's down 1.5%. S&P is down 1%. This is just a very, very red day. BMNR is an insanely speculative position. This is why I said, like, for me, this is going to remain a growing position in my portfolio, but still small relative to the other things that I'm investing in, like, you know, NVIDIA, Google, Amazon, SoFi, Shopify, all of these very, very constructive businesses. So once again, if you still think that BMNR or Ethereum is going to grow, what has changed in the picture for BMNR? They're buying more and more Ethereum. And if the utility of Ethereum continues to grow, well, that's going to lead to some pretty good returns. Let's real quick, because we still have some time before the market closes, 4 minutes. Let me just dive into this really quick. Jamie Dimon was talking about crypto. Let me see if I can bring this up. Okay, and put on audio. Have a listen to what he said about crypto. Remember, this guy was extremely skeptical about crypto before. And let me know if you hear this.
Skeptical of crypto at one point. He was still skeptical.
I've gotten away with no damage so far. Crypto is real. If you mean blockchain, stable coins, you have a JP Morgan deposit coin, you can move stuff, smart contracts are real, all that stuff is real. It will be used by all of us to facilitate, better transactions and customer service.
If anybody was skeptical of crypto at one point.
I was skeptical before, not very skeptical anymore. So it doesn't mean that BM&R is the end-all be-all, but what has changed? More companies are building on Ethereum, and, there's more like mega business leaders that are saying, no, I was wrong. This thing is the future. We're all going to be using blockchain technology and smart contracts. And, oh, by the way, which is the largest blockchain for stablecoin, smart contracts, all of these things? Ethereum. So take your pick. Like I said, you definitely do not need to follow into this trade for BM&R. It's definitely speculative and very different than the other names that we take a look at. Sorry, just wanted to address that question there. Let's jump into, not that. Where, I always forget how to use this dang thing. There we go. Okay. And then, so we have Amazon down 3% going into earnings, 222. Today hit a high of 228, not an all-time high for the company, but yeah. Apple actually staying green. Some people could actually look at this as like a value stock, I swear. This company just does not sell off. $4 trillion business and holding strong. Can't wait to see what iPhone 17 sales have looked like and how that's affected the business going forward. So we won't be listening to the call per se unless there's not an overlap in the calls with Amazon. But still interested in how the business is actually doing. Reddit, 195.30. Should I buy shares? Should I play earnings and buy some shares of Reddit before earnings? Is that what we should do? No. First comment, no. Okay. Another no, a yes. Buy shares they'll beat. Let's see what they're expecting for earnings here. What am I looking for? Reddit. Reddit is expecting $550 million of revenue, 52 cents of EPS. How does that compare to last quarter? Quite the raise expected for revenue. Wow. Expectations quarter over quarter. Last quarter, they expected $425 million. This quarter, $550 million. They're not messing around. They expect growth. And EPS is also expected at the highest EPS levels they've ever seen. So not a lot of... I'm not saying they can't beat, but I don't know if it will be as insane as the quarters before. If we look previously, they have beat revenue by 11%, 11.3%, 6%, 6%, and then 17%. Those are huge beats just on revenue. On EPS, they beat by 130%, 550%, 50%, 300%, 81%. I think people have stopped messing around with Reddit. But then again, those beats are so big. Look at my little thinking fingers here. I'm getting so excited. Market is closed. You're so right. Ladies and gentlemen, let's get ready for the numbers to pop out. When does Reddit's numbers come out? 4:06. Okay, I've got a couple minutes to think about this. What am I doing, ladies and gentlemen? What am I doing? Roku immediately down 6% on earnings. Is this just jitters or do we have the numbers? Amazon up 5%. I don't think cloud missed, ladies and gentlemen, up 6%. 235. Guys, we've been on a slam for earnings lately. The calls have been on point. Makes me want to buy Reddit. I've got to... Don't follow me into this trade. It didn't work out for me yesterday with Meta. Still climbing up 8%, 240. Oh my gosh. Don't follow me into Reddit. I'm not being a smart investor here. I'm just... Reddit's already up 2%. Ah! I'm gonna play. Let's play. Set them up. Let's play. Okay. I'm not buying a big amount, or I'm not buying a lot of shares here, but I'm just gonna dabble. Okay. Watch it be like down 10% the second I put this trade in. Okay. I am in on Reddit. Let's see what happens. Let's see what happens. 406 is whenever we're expecting the Reddit numbers. They are flat on earnings right now. Amazon going to be up 10%, 245. Or, oh my gosh. Okay, let's get these numbers. Sorry, guys. I had to make a quick trade. We're back on track. Amazon Q3 net sales was 180 billion, 177 billion expected. Okay. Amazon Q3 AWS was 33 billion, 32 was expected. Beat on AWS. AWS EPS, holy freaking crap. 195, 158 was expected. And now we're up 10% on Amazon. 10 freaking percent on Amazon. Oh my gosh. And it looks like Reddit might have missed. It was a bad trade, ladies and gentlemen. We're down 6, we're down 7%. It happens. We nibbled, we got bit. Okay? I lost. I won on Amazon and could have saved myself. I didn't want to. Okay? This is why I don't trade. So the companies that I'm buying in looking at long term, we're smashing home runs here. Okay. Yesterday, ServiceNow, Amazon, or Google. Today, Amazon. Great calls. Roku down 14%. Kathy Wood is pissed. Reddit down 4%. Okay. Up 10. Holy crap. Physical store net sales beat on Amazon. EPS, huge crush. That was a big beat for them. Let's see what else I can find. EPS beat by 24%. Up 36% year over year. Revenue beat by 1%. Huge EPS beat. People said that the margin doesn't work. We had people in the chat the other day telling me that Amazon's business model doesn't work. It's just not feasible. EPS beat by 24%. This is a multi-trillion-dollar company just tearing the heads off of Wall Street expectations by 24%. How could you be so wrong? So exciting. Reddit. Can Reddit go green? Please. Please. Make me look like I have a skill in this investing game. A single skill, down 1%. Flat on the day. Okay. Amazon still holding up 10, starting to see some red candles. We'll see if that materializes into anything as people get more and more information about this quarter. Atlassian, they're up 10%. EPS beat by 24%. Revenue beat by 2%. Smashing. Tiz was smashing. Rocket Mortgage up 2.6%. Western Digital up 2.8%. I'll get those numbers here in a second. Going back to Reddit, I've just got more news on the desk. Let's go through. AWS they did hit the 20% year over year target. That's faster than last quarter, growing at a pace they haven't seen since 2022. Okay. Q4 guidance implies a 10%, 10 to 13% year over year growth. Also put in there 190 basis points of an FX tailwind because of the weakening dollar here. Segments. Online stores grew by 9.8% year over year. Physical stores, 6.7% year over year. Third-party sellers services, 12% year over year. Subscription services, Prime, all those things, 11% year over year. North America grew by 11%. International net sales, 14%. International's growing more than their North American sales. Let's see what Andy Jassy just said. We continue to see strong momentum across Amazon as AI drives meaningful improvement in every corner of our business. AWS is re-accelerating to 20% year-over-year growth with strong demand in AI and core infrastructure as we add capacity. As we add capacity, baby, where's that CapEx? Let's find the CapEx. I don't have CapEx just yet, but I do have free cash flow. Free cash flow, $14.8 billion. Okay, wait. I have operating cash flow, 130, and free cash flow, 14.8. So they had 115 billion of CapEx or something like this, if I'm just doing the math in my head. Down year over year on free cash flow driven by higher capital expenditures. That does not go all to NVIDIA and these types of chip designers because unlike other companies, Amazon actually is setting up other warehouses and other facilities, buying a lot of equipment for other services of their business. Why is Reddit up 11%? Reddit's up 11%. Okay. EPS. I called that. I called it. Beat by 54%. I said the margin was killing it. Okay. EPS beat by 54%. Revenue beat by 6%. Made out like a bandit. I'll sell after earnings call. Okay, there we go. Sorry. Got excited. Thought I wasn't a trader there for a second. Now we're back. We've got a new career path. I'm happy again. Coinbase up 1%. Cloudflare down 1%. At one point hitting 230 in the after hours. Atlassian up 12.4%. I'll get those numbers there in a second, but Amazon's still holding up much higher numbers, 243. Let's frickin' go. Okay. Rocket Mortgage. Where's Rocket Mortgage? Rocket Mortgage up 6%. They beat EPS by 40%, beat revenue by 8%. Sometimes you just got to trust your gut. I've been doing this for over 10 years. Sometimes you just feel it. And if I didn't, and if we lost, I would have just said the opposite. So I'm just on a high right now. Okay? Don't take this into account. I'm not actually good at trading at all. Okay. See? Honestly, I think this needs to stay red. I need to lose money, so I stop doing these types of activities. I need to learn a valuable lesson to stop doing this. I should have sold out earlier. I said, I'm going to wait till earnings call, and then you guys all sold your shares. You didn't act as a team. We were supposed to act as a team. No, I told you guys not to follow me into it. You listened, appreciate it, and yeah, we're back to flat. Twilio up 7%, Atlassian 11%. Let me get some more numbers. Okay, we go back to fundamentals. I was on a high. Roku, I have Roku here, right? Down 10%. Beat by EPS by 78%, and they were flat on revenue. EPS is up 367% year over year, and revenue is up 14% year over year. I'll get some more numbers here in a second, deeper on that business. I definitely want to hear more about what they have to say, but for now, okay, yeah, we did Amazon. I'm going to look at their CapEx here in a second. Coinbase, double beat from them, up 1%. EPS beat by 20. What are these rates, man? EPS beat by 28%. Revenue beat by 4%. Okay. Cool. First Solar down 3%. They beat on revenue. They missed on EPS. Then in full year of 2025, they guided for worse than expected EPS and revenue. So guidance, this is a double miss. They beat on revenue, however, in this quarter. CapEx is coming in worse than expected. Volume sales for guidance worse than expected. Gross margin worse than expected. CEO says we've strengthened our position with the commissioning of our 5th U.S. manufacturing facility, enhancing liquidity and record sales. Despite trade and policy challenges in the industry, our pricing and delivery certainty continues to differentiate us. Okay. Netflix. Whoa. Is Netflix just randomly up 3%? They're not even, their earnings already passed, right? They announced a 10-for-1 stock split. 10-for-1. If you have one share of Netflix here at $1,100, you now have 10 shares at $111. Cool. Or $110, sorry. Very, very cool. Yeah, Amazon AWS growth was expected at 18% year over year. They put up 20% year over year growth. That's why people are very excited on this name. Did not know Zillow was reporting. Zillow up 3.7%, beat by EPS by 100%, 4 cents instead of 2, and revenue came in essentially flat, $676 million. Okay, let's go back to Coinbase. You guys know I like I like the crypto area from time to time. Coinbase, we've had a weird relationship. I'm mixed. I love Brian Armstrong. He's one of the greatest CEOs of all time. I think that the industry in general, while it grows, is still going to have a lot of margin compression. So I'm just not a super fan. And that said, they beat on revenue very, very slightly. They beat on EPS by quite a decent margin, $1.50 versus $1.21 expected. Trading volume came in worse than expected. They did $295 billion. The estimate was $310 billion. That's huge. Surprised that they were still able to beat in total revenue, even though trading volume was so much lower. This means that subscription and service revenue must have been huge this quarter. I'll have to look at that before Amazon's call. Guidance looks good. Not anything spectacular though. And okay, wow, this is a lot. They're launching embedded wallets that enable low-friction in-app wallets with instant USDC settlement on Base. Payment APIs and B2B APIs are rolling out for stablecoin checkouts, 24/7 payouts, treasury automation, virtual accounts, settlements in USDC on Base. Base app is in beta. We knew that. It kind of looks crappy. The social and chat and all those things look like, why would you ever need it? And USDC's market cap is now at $74 billion, and Coinbase customers are driving the largest share of that balance growth. Average USDC balance on Coinbase products, roughly $15 billion. Okay, cool. Cool. What else are you guys seeing? Everyone's talking about Intel in talks to acquire AI chip startup Sambanova. Let's see, Intel really quick. Intel essentially flat in after hours. No one cares. Okay, let's go back. Am I making any money on Reddit? What is happening? Reddit, we're flat. Come on, man. I had such high hopes. I popped off and everything. People are going to clip that. That sucks. Twilio up 6%. Let me see if I can find some Twilio numbers. Double beat here by Western Digital. Twilio, EPS beat by 17%, revenue beat by 4%, coming in at $1.3 billion, EPS $1.25. EPS is up 23% year over year, while revenue is up 15% year over year. Let me try to get some more details on that. Okay, so we did. Okay, wait. No. I'm switching. Sorry. We're talking about Reddit real quick. Up 2%. Reddit's revenue is up 68% year over year. EPS 80 cents versus 51 cents expected. Okay, so huge beat on EPS. Adjusted EBITDA came in at 236 million versus 195 million. That's a beat. Net income beat. Daily active users 116 million. There was 114 million expected. This is beats across the board. Guidance double beat. Or not double beat. The guidance beat. Revenue 660 million. Wall Street wanted 638 million. That's a big beat. Adjusted EBITDA, they're now expecting 280 million in adjusted EBITDA. Wall Street wanted 260. These are huge beats. Okay. Gross margins 91%, up 90 basis points year over year. Operating cash flow 185 million. Free cash flow 183 million. So 2 million of CapEx. Fully diluted shares are down quarter over quarter and year over year. I mean, this is a stunning business. Up 4%. Yeah, I better start making some money. 444 million people come each week for authentic conversations that they can't find anywhere else, and increasingly for engagement with brands, institutions, and publishers, said Steve Hoffman, the co-founder and CEO. We have to do a serious deep dive on Reddit. This business is like none other. I mean, honestly, this is like early days growth of Facebook. The numbers they're putting up, they have $585 million of revenue, and they're growing at 68%. And my bet to you before I look deeper into the numbers is that that's heavily based towards advertising dollars, and the other services revenue is probably dragging that down closer to 20%. Don't worry. Yeah, guys, if you're not a customer of Reddit, that doesn't mean that the business is not growing. Okay? I'm not a big user of Reddit. Whether or not you guys think that, the content's authentic or whatever, that's besides the point. It's whether or not people like to use the product and come back more often. Okay? Up 6%. Amazon up 9.7%. I'm sure I'm going to lose money on some of these trades. Not today. Not today, as we hopefully, man, this makes me want to listen to Reddit's call. We will listen. I promise you, we'll listen to Amazon's call. I've got a lot more money in Amazon than I do Reddit, but I'm still excited, right? Okay, let's take a look really quick at Amazon. Well, Amazon's slideshow, like whenever we take a look at their stock, you're going to laugh. It does. It's not for the faint of heart. It is the most ugly thing ever. But we can go ahead and read their press release really quick. Is that big enough, or is that too big? Okay. Amazon. Net sales increased 13% to 180. Wait, can I put this into dark mode? Is that better? Do you guys like that? I honestly prefer that. It's going to save my eyes. Okay, let me know. I prefer this. Net sales increased 13%. No? I'm getting mixed reactions. Okay. How about you guys just close your eyes and listen to the sound of my voice? Because it's bothering my eyes. North American segment sales increased 11% year over year to $106 billion. International segment sales increased 14% year over year to $40.9 billion, or increased 10%, excluding changes in foreign exchange rates. AWS sales increased 20% to $33 billion. Operating income was $17.4 billion in the third quarter compared to $17.4 billion in the third quarter of 2024. Third quarter 2025 operating income included two special charges: $2.5 billion related to a legal settlement with the Federal Trade Commission, and $1.8 billion in estimated severance costs, primarily related to planned role eliminations. Without these charges, operating income would have been $21.7 billion. Wow. North American segment was at $4.8 billion. International segment was at $1.2 billion. They don't give me a margin, eh? I'm going to have to do that myself. Okay. Operating cash flow increased 16% to $130.7 billion compared to $112.7 billion. And free cash flow decreased. Yeah, we already read that. Okay. Let me go here. We continue to see strong demand in AI and core infrastructure, and we've been focused on accelerating capacity, adding more than 3.8 gigawatts in the past 12 months. In stores, we continue to realize the benefits of involving our fulfillment network, and we're on track to deliver to Prime members at the fastest speeds ever again this year. At the fastest speeds ever. Oh, okay, I see. They're just going to beat their past beats. Expand same-day delivery for perishable deliveries or groceries to over 2,300 communities by the end of the year, and double the number of rural communities with access to Amazon same-day and next-day delivery. Okay, let's read some of these highlights, and then we will move on to Reddit really quickly. Amazon's still holding up 9.6%, $244 a share. Some highlights for this quarter: saw continued strong adoption of Trainium 2, its custom AI chip, which is fully subscribed and has a multi-billion-dollar business that grew 150% quarter over quarter. Holy crap. Launched Project Rainier, a massive AI compute cluster containing nearly 500,000 Trainium 2 chips to build and deploy Anthropic's leading Claude AI models. Literally an entire cluster just for Claude. Their biggest customer, by the way. Announced a new Amazon EC2 P6e GB200 Ultra servers using NVIDIA Grace Blackwell super chips, designed for training and deployed the largest, most sophisticated AI models. Added 3.8 gigawatts of power capacity in the last 12 months, more than any other cloud provider. Added new foundation models in Amazon Blackrock, including open weight models for OpenAI, DeepSeek v3.1, and Quinn 3, as well as Anthropic's Claude Sonnet 4.1, Claude Opus 4.1, and Claude Haiku 4.5. Announced a number of new... Okay, this is going to be a nightmare reading through all this stuff, but it looks like they are also working with Amazon's, AWS's Epic processors for a wide range of applications. Apple M4 chips for building iPhones and Mac apps. Okay. Expanded access to Kiro, an agentic coding integration development environment that brings clarity through spec-driven development, with more than 100,000 plus developers jumping in during the first days of preview and more than doubling since. Launched Quick Suite agentic AI apps for AI, or that acts as an AI teammate, connecting business data to apps and letting employees interact with AI agents. Saw strong adoption of Transform, an AI agent that makes it easy for customers to migrate to AWS. Grew Connect, an AI solution that enables contact centers to provide consistent, personalized consumer experience to up to $1 billion of annualized revenue run rate in the last recent weeks. Release Nova Multimodal embedding, the first unified model that enables search results with leading accuracy across text, documents, images, videos, and audio. Added an AWS region in New Zealand with more than 10 more available zones in 3 more regions. Signed new AWS agreements with Delta Airlines, Volkswagen, Fox Corporation, ServiceNow, Qantas Airways, US General Services administration, SAP, Lululemon, Live Nation. Okay. ARM is in there too. Cursor, Perplexity. All right. Amazon is a cloud company. You know, this is where they make all their profit. So selling the services is just an added benefit of their business. I mean, AWS has always been the focus. Well, ever since it became a thing, thanks to Jeffy B. Thanks, Jeff. Expanded multi-channel fulfillment to sellers using Walmart, Shopify, and Shein. Empowered sellers with Gen AI tools with over 1.3 million independent sellers using these tools to easily create high-quality, engaging product listings and bring even more selection to customers. Launched Help Me to... I don't know why I'm reading this backwards. Launched Help Me Decide, an AI feature to help customers zero in on the right products using browsing activity, searches, shopping history, and preferences. Okay, cool. Anyone that I've heard use Rufus has told me it's a terrible experience. Amazon up 9%. Amazon partnerships to allow advertisers to buy ad spaces on Netflix, Spotify, and SiriusXM through Amazon Ads drew over 70 plus million viewers to the Summer I Turned Pretty season 3. Kicked off the 4th season of Thursday Night Football on Prime Video. Debuted NBA on Prime in more than 200 countries, delivering average audiences of 125 million customers in the U.S. during season opening doubleheader. Added Peacock Premium Plus and Fox One to Prime Video add-on subscriptions, offering more than 100 channels in the United States. Launched the reimagined Luna Cloud gaming services, including Game Night, a new collection of living room games at no additional cost to Prime members. Wow. Launched 4 new AI-powered Echo devices built on Alexa Plus. Expanded Project Kuiper fleet to 150 plus satellites. Wow, that's gone fast, eh? Demonstrating industry-leading downlink speeds of 1 gigabit per second, and announced commercial agreements with JetBlue, Australia's national broadband network, and Kazakh Telecom, leading telecommunications provider for Kazakhstan, began operating Zoox robotaxi services to customers in Las Vegas. So I was actually in Las Vegas the day that they announced that, whenever it commercialized, and I was not allowed to go on it. So don't believe them. And announced Future Ready 2030, a $2.5 billion commitment to expand access to education and skills training for at least 50 million people, empowering both employees and broader workforce. Okay. Let's go check back up on the stocks. Sick of reading this. Amazon is up 9.5% to 244. Coinbase is flat. Reddit's flat. Apple's flat. Cloudflare, at one point turning quite negative, now up 2.5%. MicroStrategy. Guys, what the heck's happening with strategy? Why didn't you guys tell me? Strategy's up 5.5%. Okay. Let's go take a quick peek-see on what the heck's going on with strategy. Does anyone have anything on them? Okay, I have it now. Beat on revenue, $128.7 million. An estimate was $116 million. EPS also beat $8.40 versus an estimate of $7.90. No one cares about that. Cash decreased. Oh, they just bought all the Bitcoin. People are expecting $1.2 billion of cash. They end up seeing actually coming in at $54 million of cash, which means they've been buying. Guidance assumes year-end 2025 Bitcoin price of $150,000. Where is Bitcoin today? 106, and seeing big red candles as people are selling on that news, I guess. Okay. Okay. Let's see. Rocket. Oh, we just got Apple news. Apple just reported huge red candles. EPS beat by 5%, $1.85 versus $1.77 expected. That was good. Revenue came in exactly in line, $102.5 billion. So maybe some recovery here. It definitely doesn't look bad so far. Services revenue ended up slightly beating $28.7 billion versus $28.1 billion. Apple's Q4 Greater China revenue, this is where people are mad. $14.5 billion in the Greater China revenue versus $16.5 billion. $2 billion miss from their Chinese segments of their business. China loves their iPhones. And if that's somehow changing, that might not be good. But let me go to Apple's press release to get some more information than that. I want to see more than that. Okay. Press release. Here we go. Apple today. Okay, today Apple is proud to report a June quarter revenue report and double-digit growth in iPhone, Mac services and growth around the world in every geographic segment, said Tim Cook. Oh, no. This is not the quarter. That's under their Q3. Oh, sorry. No. Don't listen to me. It's not up yet. Don't disregard. Okay. Apple's still facing supply constraints on iPhone 17 and 16 models. That's another reason why it's slightly selling off here. Okay. Timmy Cook didn't deliver to China? Okay. Let's see. I'm not seeing any report on my side. It looks like it's just Bloomberg getting this right now. Okay, I got it. Today, Apple's very proud to report their September quarter revenue, thank you, of $102.5 billion, including a September quarter revenue record for iPhone and all-time record revenue for services. Our September results capped off a record fiscal year with revenue reaching $416 billion, as well as double-digit EPS growth. And thanks to a very high levels of customer satisfaction and loyalty, our installed base of active devices also reached an all-time high across all product categories and geographic segments. Wow. That's all I have so far. Okay, we'll keep up on that over time. But Rocket Mortgages, let's go to Rocket really quick. Up 2.8%. Adjusted revenue was up. That was a beat. EPS was a beat. Guidance was a beat. That's a triple beat from Rocket companies. They said they're doing an all-stock acquisition of Mr. Cooper, which is closed on October 1st, which increased their Class A float to 35%. CEO commentary said standout quarter, beat the high end of adjusted revenue guide, accelerated Redfin momentum, and closed the Mr. Cooper transaction. We're building a vertically integrated home ownership platform for the AI era. What is the way to play what is the way to play? Here, wait one sec. Amazon's call is at 5 o'clock. I think they're all at 5 o'clock, if I'm not mistaken. Reddit's call. I wish Reddit's call was at like 4:30 or something. This would allow me to listen to a little bit of that call, but that's also at 5 o'clock. Freaking overlap, man. I'm not happy with it. Okay. Let's quickly switch over to Reddit really quick. Unless something is happening with Apple. No, they're sitting essentially flat. Reddit's up 2.8%. Let's just take a little look here. Revenue was $585 million, increase of 64%. Gross margin improved. GAAP net income improved. Adjusted EBITDA margin was 40%, an improvement. Year over year was 236 to 142 million. Operating cash flow increased. Free cash flow increased. Yeah. Okay. Daily active users increased 19% year over year. Weekly active uniques increased 21% year over year. And logged out users grew at a faster rate than logged in users. That's not super good. They make like 10x more on the logged in users. But yeah. Let's see what else here. Okay, let me read through this really quick, and then we will get back to Amazon and everything. Remember, the call is at 5 p.m. Okay? Let me also put that in here really quick. Probably best we have some like text or something on screen. Okay. Amazon call at 5 p.m. EST. Okay. And let me just throw that in there for anyone that's watching. I'll just clear up some concerns. Okay, let's get back to it. Now, we ended the quarter with 116 million monthly daily active uniques and 450 million weekly active uniques, both growing at around 20% year over year. We're especially encouraged by the mix of growth with organic product-led improvements and successful marketing both playing a role. The formula is working, and it's one we're focused on replicating across markets. Revenue came in at $585 million, up 68% year over year, and our financial model is scaling very well. We continue to be GAAP profitable with net income of $168 million and a net margin of 28%. Today, Reddit is the third most visited site in the US. That puts us in rare company with YouTube, Amazon, and what's number one? Google? I guess, right? With YouTube and Amazon. And reflects how Reddit is where people start. Or is it Facebook? Facebook number one, I guess. How does that even make sense that they're third highest? Wikipedia? Yeah, you would think that like Facebook is higher. You would think that Instagram is high. Well, no, I guess it's a website now. Okay. And reflects how Reddit is where people start, not just where they end up. People come here to find trusted perspectives, to participate in communities and share their interests, no matter how niche or mainstream, and increasingly to engage directly with brands, institutions, and publishers. In addition, we launched new Reddit Pro tools tailored for publishers. Early adopters like the Associated Press can now sync their feeds, automatically import articles, track how their stories are shared, and use AI-powered tools to find the right communities. Our consumer product strategy continues to focus on making Reddit easier to use and more rewarding from day one, so casual users become daily users. They're already coming to Reddit. Now it's on us to make that experience worth coming back for by being more relevant and intuitive. We're making real product. Let's start with the core product. We're making real progress. Let's start with the core product. We're redesigning the Reddit experience with a more modern search-forward interface and streamlining onboarding so it's easier for new users to find what they're looking for with a dynamic, personalized home feed. We're also finding more people contribute to their favorite communities by using AI to interpret subreddit rules and surface post insights. On the moderation side, we're investing in tools that help mods grow and strengthen their communities. These tools are now live in over 3,000 communities, which are seeing 30 plus more active moderators on average. Moderators aren't just enforcing rules, they're shaping cultures, building communities, and helping Reddit thrive. Our job is to give them the tools to do that more efficiently. Search is our next biggest opportunity because Reddit conversations are uniquely authentic, contextual, and helpful. This is why we invest in making Reddit a true search destination. In Q3, over 75 million people searched on Reddit weekly, and that number continues to rise. Reddit Answers provided users with curated, community-powered insights that are often more helpful than traditional web results. We've started integrating Reddit Answers into core search, increasing its visibility across conversation and rolling it out to non-English languages. Third, internationalization. Our international growth continues to accelerate. Machine translation is available in 30 plus languages and is our major driver of top of funnel growth in the United States. Okay. Let's just see if we can find any other statistics. I don't want to be bored here reading all day. Quick check back. Amazon still up 10%. Apple up 1.7%. So actually turning around those massive red candles going green. Reddit's up 2%. Coinbase nearly flat. Cloudflare up 6%. Strategy up 4.4%. Roku down 6.8%. First Solar up 1%, Twilio up 7 or 6.5%. Atlassian was up 14%, now only up 2%. Riot Platforms up 6%, huge. Western Digital up 9%. Rocket Companies up 4.5%. Arthur J. Gallagher down 7.8%. Okay. Let's see here. Bitmine is up 3.7% in the after hours. I don't know what if anything's happening with ETH or something. No, ETH is flat. What's with the huge spike in after hours? What happened with BMNR? Bear with me. I gotta just look for BMNR content real quick. Is it staking announcement? Is it staking? Okay. No. Maybe it's just MicroStrategy. Maybe you guys are right. I would think that, such a huge change would be based on something a little bit more than that, but maybe it's just, maybe it literally is just running with strategy. What happened with BMNR and SoFi today? This is just general, market. Like the market was terrible today. The entire market ended up selling off. NASDAQ ended up closing down like 1.5%. Tim Cook bringing this stock to 281. Let's see if I can find more news on Apple. I can. Okay. iPhone sales ended up missing. Mac sales ended up beating just slightly. So iPhone sales were expected at 50 billion. They got 49 billion. So slight miss there. Mac ended up getting 8.7 billion in sales. They were expecting 8.5. iPad was flat, and wearables came in at 9 billion. They were expecting 8.6 billion. So products revenue ended up beating. Services revenue ended up beating. Cash dividend was declared at 26 cents per share. September quarter record for the company. Services revenue reached all-time high. Tim Cook said September quarterly revenue reached $102.5 billion, including a September quarter record for iPhone and all-time high revenue record for services. We got record fiscal year with revenue reaching $416 billion in double-digit EPS growth, installed base of active devices at an all-time high across all product categories and regions. Yeah, I don't know what the turnaround there was. We'll see guidance on the call, so I'll keep you guys updated. We are going to listen to the Amazon call, but as the Apple call is going on, I will still be able to update us on what's happening over there. I'll just put it on screen in text. Okay? Similar to something like this. Yeah, by the way, if Amazon ends up opening tomorrow at these prices up 11.7%, 11.8%, this will be its all-time high. Historic all-time high. Literally, it wasn't long ago when you had opportunity to buy this company at like $211. Now it's looking like it's going to open up at $250. Can we break 250? 249.75. Can we break 250? Okay. Oh, sorry. I thought I got a report there. I did not. Okay. Big candle after hitting 249.81. That's no fun. Apple hitting really good highs. If they end up opening at this price, this will be the highest Apple has ever been at, $280. That would be an all-time high. Past high, 274. Cloudflare up 6%. We should check in on, let me see. Let me see if CNBC is, let me see if I can get something from them as well. If maybe they've been talking about earnings, we can get some insight from them. Okay. Reddit smashing earnings is sort of a standard now. Okay, coming back, they're talking about Apple. Let's have a listen. Real quick. Oh, wait, one sec. Oh my gosh, I don't know how to do this. I'm on a new thing.
As well.
Can you guys hear this?
Sales falling, but expected to return to growth in this holiday quarter. Meantime, check out Solstice Advanced Materials. The stock bouncing around today. It was lower in the morning, popping as much as 8% in the afternoon. Shares closed slightly in the red. Solstice is the first of hundreds.
Can you guys hear that or no? I know you can't see it. For some reason, it's not letting me share the screen. It's just showing up black, but maybe during the audio part, which is maybe the only important part, we'll be able to share the audio at least. Okay. That kind of sucks, but this new software doesn't seem to let me share the actual visual. Unfortunately, George, I might not be able to show you. Okay. Oh, no. No. Okay. That's Amazon's call. We got 10 minutes until Amazon's call. And, great. Okay. Looking to, I wanted to see Reddit's growth here, how it's breaking down per segment. And then we can also do the same for Amazon as well. I'm just quite interested in Reddit, only up 2% here. But it was a smashing quarter, honestly. This is surprising how good they've been able to put up these numbers here. Like, look at this over time. Tell me you don't like this. Where is it? Here. Bang. This is the quarter that they just ended up putting up. Over this period of time, the compounded annual growth rate on their growth rate now is 67.8%. That's insane. The growth rates here are like nothing we've ever seen. When do you ever get to see a company grow at this rate? Like you've been holding up 60+% growth rates for a long period now. You know? So I'm actually quite convinced that this is a name that I want to hold for a little bit longer. Amazon still up 11.5%. Holy crap, guys. This chart is insane. Apple up 4.5%, 284. 284.13. Let me check out if we have those numbers. We can just explore Apple a quick second here. Is their capital expenditures just still bottomed out? Starting to actually spend a little bit more, $3.4 billion. But then whenever we look at free cash flow here, yeah, I mean, they're a giant. Come on now. Come on. This is Apple. $24.4 billion of free cash flow this quarter. We don't even have to look that far back now. Oh, sorry. This wasn't even... These aren't even updated numbers. Sorry. No. Don't look at that. But we can go and look at it through this way. These are the only numbers that we have so far for growth. And if I take away that really quick, we look at revenue growth over time. And drag this out. Nearly 8% growth rates. I mean, this is accelerating growth. This definitely is. This is Apple we're talking about. You know? That's pretty unique. Honestly, they're not doing 3% growth rates like they were previously. Steve with the $50 donation. Have to celebrate my boy Timmy Cook. Congratulations, brother. Thank you for buying me all those shares. We're hitting into new highs. I'm gonna have to buy $50 more of this company. It's doing very well. Okay, wait. Dan Ives is talking.
The détente between Trump and Xi, the U.S. and China today. What does that mean for Apple?
I mean, to me, like, look, Cook's on the right side of it, right? I mean, playing nice in the sandbox, in the Beltway. I think that's very bullish relative to any worries about supply chain issues relative to Apple in China, some of the stuff they're doing from an India perspective. Look, it comes down to Cook, 10% politician, 90% CEO. And you start to think about what's happened on the China story. That, to me, is a green light, because now the runway's there, rare earthing kicked down, you have the trade framework out there. It's very strong for big tech, strong for names like Apple with the exposure to China, names like Tesla as well. And I think that's the overall theme here, is that now you're starting to see Amazon, Apple get into it. And I think second, third, fourth derivatives starting to play out. It's my view that's why this tech bull market, 2 to 3 more years left relative to this AI revolution trade.
That would be a good advertisement for Tim Cook, if he needed one. 10% politician, 90% CEO, 100% up here in overtime. What is the Amazon advertising business role here? Because we saw a strong performance from Alphabet's Google yesterday, from Meta as well on the advertising line. When there are questions about how the consumer is going to perform in Q4, especially the working class consumer that's stretched, what role do these digital advertising giants that can target effectively to a mass market play in the ecosystem?
I mean, in our opinion, I mean, this could add 10 to 15% just the stock alone from an advertising. Because I don't, look, it comes down to like what's being factored into Amazon, the advertising, I think minimal. You look at AWS, already counting them out. The consumer piece, clear from a margin perspective, I mean, that's already sort of discounted. So I just think Amazon now has a lot of levers from a growth perspective. Anthropic's going to be there. I think they're going to do a lot more acquisitions relative to Google in the DOJ suit. So this just comes down to, I think this is a company going on the offensive rather than the defensive, and I think that's going to be Jassy's tone on the call.
This affects the NASDAQ tomorrow?
Oh, I think tomorrow it's going to be a nice head into the weekend for the tech bulls. You know, like bears maybe were some white knuckles there that they were yelling given the Meta. It just comes down to hyperscale spending. It's a CapEx super cycle. And that's why I think that continues to play out. And even though, you know, there will be some nervousness, I think this is a tech market that goes up another 8% rest of the year.
Vindication for some bulls out there, and you have been saying it all along for sure. Dan Ives, thank you. Meantime, that's going to do it for us here at Overtime. A lot more after-hours action and fast money right now.
Okay, just here and there from Dan Ives really quickly, as he once again, no shocker, is extremely, extremely bullish on Apple, Amazon, big tech in general, and what that means for spending on names like NVIDIA. Up right now, 204 in the after hours, a 0.6%. For those that don't know me or are new to the stream, that is my largest position. So I am heavily, heavily bullish on the CapEx cycle. And yeah, it's like over 40% of my entire portfolio is in NVIDIA. Okay. We still are getting ready for Amazon's call here in the next couple of minutes. I have their call up and ready to go. So we'll listen to that whenever it appears. But yeah, until then, we can take one last look maybe at Amazon. But yeah, now with this new software that I'm using, we're going to be listening to the whole call. Yeah, Amazon's call. Just because I need to listen to it anyway. It's really important that, you know, as a shareholder that we get through earnings, all the questions, hear what Andy Jassy has to say about, you know, not just his own company, but the market in general. A lot of them have to say how they feel about, you know, the CapEx spend cycles and where they think AI is going. So to me, I find like I am not an expert in this field. They are. They're working groundwork on everything new in artificial intelligence. They get unbelievable insight. So we need to learn from them. Don't learn from me, learn from them. But we can learn together, and that's what I'm hoping to do here. Amazon up 11.8%. Smashing earnings. Smashing expectations. EPS beat by 24%. But let's get ready to jump into these earnings here in a second. Also, with this new software, like I was going to say, we can listen to the call while doing anything else. So I can have the stock up on screen, but if you guys also want to see other details or something like this, maybe there's breaking news, Trump says something or whatever, I can throw that up on screen. So just because you hear one thing doesn't mean that there's not something else happening on screen. Okay? And also, we will be looking around to other stocks. Reddit now breaking out, up 8%. Coinbase up 2.5%. I bought Reddit right before their earnings call, so I'll have to check what my exact price is that I got shares at. But yeah, we did buy before earnings. Okay, earnings is starting on Amazon.
25 financial results teleconference. At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question and
Everyone
answer
hear that?
session. Today's call is being recorded. And for opening remarks, I'll be turning the call over to the Vice President of Investor Relations, Mr. Dave Fildes. Thank you, sir. Please go ahead.
Hello, and welcome to our Q3 2025 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2024. Our comments and responses to your questions reflect management's views as of today, October 30th, 2025 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions, tariff and trade policies, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now I'll turn the call over to Andy.
Thanks, Dave. We saw strong growth across our business in Q3, and we're reporting $180.2 billion in revenue, up 12% year over year, excluding the impact from foreign exchange rates. Operating income was $17.4 billion, but would have been over $21 billion if not for two special Q3 expenses: $2.5 billion for an FTC settlement and $1.8 billion for estimated severance costs. Trailing 12-month free cash flow was $14.8 billion. I'll start with AWS. AWS is growing at a pace we haven't seen since 2022, re-accelerating to 20.2% year over year, our largest growth rate in 11 quarters. It's worth remembering that year-over-year percentage growth is a relative term. It's very different having 20% year-over-year growth on a $132 billion annualized run rate than to have a higher percentage growth rate on a meaningfully smaller annual revenue, which is the case with our competitors. Backlog grew to $200 billion by Q3 quarter end and doesn't include several unannounced new deals in October, which together are more than our total deal volume for all of Q3. AWS is gaining momentum. Customers want to be running their core and AI workloads in AWS, given its stronger functionality, security, and operational performance. And the scale I see in front of us gives me significant confidence in what lies ahead. I'll share a little more detail on why. It starts with AWS having much broader infrastructure functionality. Startups, enterprises, and governments want to move their production workloads to the place that has the broadest and deepest array of capabilities. AWS has more services and deeper features within those services than anybody else and continues to innovate at a rapid clip. These are key building blocks for anything that customers want to create, and they're a big part of why Gartner has named AWS leader in its Strategic Cloud Platform Services Magic Quadrant for 15 consecutive years. We're bringing the same building block approach to AI. SageMaker makes it much simpler for companies to build and deploy their own foundation models. Bedrock gives customers leading selection of foundation models and superior price performance to deploy inference into their next-generation applications. A lot of the future value companies will get from AI will be in the form of agents. AWS is heavily investing in this area and well-positioned to be a leader. Companies will both create their own agents and use agents from other companies. For those building their own, it's been harder to build than it should be. It's why we launched Strands, to make it much easier to create agents from any foundation model that builders desire. For companies who successfully built agents, They've hesitated putting them into production because they lack secure, scalable runtime services or memory or observability built specifically for agents. It's why we launched Agent Core, a set of infrastructure building blocks that allow builders to deploy secure, scalable agents. Ericsson used Agent Core to deliver AI agents across their workforce. Sony used it to build an agentic AI platform with enterprise-level security, observability, and scalability. And Cohere Health is using Agent Core to deploy agents that will reduce medical review times by up to 30 to 40%. Agent Core's SDK has already been downloaded over 1 million times, and our builders are excited about it. It's an enabler. Companies will also use others' agents, and AWS continues to build many of the agents we believe builders will use in the future. For coding, we've recently opened up our agentic coding IDE called Kiro. More than 100,000 developers jumped into Kiro in just the first few days of preview, and that number has more than doubled since. It's processed trillions of tokens thus far, weekly actives are growing fast, and developers love its unique spec and tool calling capabilities. For migration and transformation, we offer an agent called Transform. Year to date, customers have already used it to save 700,000 hours of manual effort, the equivalent of 335 developer years of work. For example, Thomson Reuters used it to transform 1.5 million lines of code per month, moving from Windows to open source alternatives and completing tasks 4 times faster than with other migration tools. Customers have also already used Transform to analyze nearly 1 billion lines of mainframe code as they move mainframe applications to the cloud. For business customers, we've recently launched Quick Suite to bring a consumer AI-like experience to work, making it easy to find insights, conduct deep research, automate tasks, visualize data, and take actions. We've already seen users turn months-long projects into days, get 80% plus time savings on complex tasks, and realize 90% plus cost savings. And for contact centers, we offer Amazon Connect, which creates a more personalized and efficient experience for contact center agents, managers, and their customers. Connect has recently crested $1 billion annualized revenue run rate, with 12 billion minutes of customer interactions being handled by AI in the last year, and is being used by large enterprises like Capital One, Toyota, American Airlines, and Ryanair. These are real practical results for customers, and there are many more examples like them. Because of its advanced capabilities, security, operational performance, and customer focus, AWS continues to earn most of the big enterprise and government transformations to the cloud. As a result, AWS is where the preponderance of companies' data and workloads reside, and part of why most companies want to run AI in AWS. To enable customers to do so, we need to have the requisite capacity, and we've been focused on accelerating capacity the last several months, adding more than 3.8 gigawatts of power in the past 12 months, more than any other cloud provider. To put that into perspective, we're now double the power capacity that AWS was in 2022, and we're on track to double again by 2027. In the last quarter of this year alone, we expect to add at least another 1 gigawatt of power. This capacity consists of power, data center, and chips, primarily our custom silicon Trainium and NVIDIA. We've recently brought Project Rainier online, our massive AI compute cluster spanning multiple U.S. data centers and containing nearly 500,000 of our Trainium 2 chips. Anthropic is using it now to build and deploy its industry-leading AI model, Claude, which we expect to be on more than 1 million Trainium 2 chips by year-end. Trainium 2 continues to see strong adoption, is fully subscribed, and is now a multi-billion-dollar business that grew 150% quarter over quarter. Today, Trainium is being used by a small number of very large customers, but we expect to accommodate more customers starting with Trainium 3. We're building Bedrock to be the biggest inference engine in the world, and in the long run, believe Bedrock could be as big a business for AWS as EC2. And the majority of token usage in Amazon Bedrock is already running on Trainium. We're also continuing to work closely with chip partners like NVIDIA, with whom we continue to order very significant amounts, as well as with AMD and Intel. These are very important partners with whom we expect to keep growing our relationships over time. You're going to see us continue to be very aggressive investing in capacity because we see the demand. As fast as we're adding capacity right now, we're monetizing it. it's still quite early and represents an unusual opportunity for customers in AWS. I'll now turn to stores, where the team continues to deliver and innovate for customers across our key priorities: selection, low prices, and convenience, particularly fast delivery. We're offering 14% more selection since last quarter from popular brands like The North Face and Charlotte Tilbury, and we've added hundreds of thousands of items from popular brands this year. Everyday Essentials continues to grow quickly, and year-to-date is growing nearly twice as fast as the rest of the business. We continue to make it easier for customers to order low-priced perishable groceries from Amazon, and customers in more than 1,000 cities and towns now can shop fresh groceries alongside millions of Amazon.com products with free same-day delivery. This is a game changer for customers who can now order milk alongside electronics, check out with one cart, and have everything delivered to their doorstep within hours. The team also invented a new Add to Delivery button that lets customers add items to previously scheduled orders, and it's been used more than 80 million times since launch, and it just launched. It's an example of one of those seemingly simple but powerful innovations that make customers' lives easier. We remain committed to staying sharp on price and meeting or beating prices of other major retailers. In July, we had our biggest Prime Day event ever, with customers saving billions of dollars across more than 35 categories. We continue to break records on speed. We're on track to deliver at our fastest speeds ever for Prime members globally once again this year, and we've started rolling out 3-hour delivery in select U.S. cities. We're also continuing to invest in infrastructure to speed up rural deliveries and serve more customers in more communities. That includes committing over $4 billion to expand our rural delivery network across the U.S. These are small towns where people want fast delivery, but where other companies have been backing out and reducing service. In contrast, we've already increased the number of rural communities with access to our same-day and next-day delivery by 60%, reaching roughly half of the total communities we plan to expand to by the end of the year. The stores team is also innovating rapidly with AI. For example, Rufus, our AI-powered shopping assistant, has had 250 million active customers this year, with monthly users up 140% year over year, interactions up 210% year over year, and customers using Rufus during a shopping trip being 60% more likely to complete a purchase. Rufus is on track to deliver over $10 billion in incremental annualized sales. Here are the highlights. Our generative AI-powered audio feature that combines product summaries and reviews to make shopping easier has expanded from hundreds of products at launch to millions of products, and millions of customers have used it, streaming almost 3 million minutes. And Amazon Lens, an AI-powered visual search tool that lets customers find products with their phone's camera, a screenshot, or a barcode, now includes Lens Live, which instantly scans products and shows real-time matches in a swipeable carousel. Tens of millions of customers are using Amazon Lens each month. Moving on to Amazon Ads, we're pleased with the continued strong growth, generating $17.6 billion of revenue in the quarter and growing 22% year over year. We see strength across our broad portfolio of full-funnel advertising offerings that helps advertisers reach an average ad-supported audience of more than 300 million in the U.S. alone. We also continue to be excited about our demand-side platform, Amazon DSP, which lets advertisers plan, activate, and measure full-funnel investments. Last quarter, I mentioned our partnership with Roku, and we've built on that with a partnership with Netflix, providing advertisers using Amazon DSP with direct access to Netflix's premium ad inventory. We announced integrations with Spotify and SiriusXM. With Spotify, we provide advertisers with direct programmatic access to a global audience of more than 400 million monthly ad-supported listeners. And with SiriusXM, brands can reach 160 million monthly digital listeners across services like Pandora and SoundCloud. And we're excited about the advertising opportunity around Prime Video Live Sports. Live Sports got a lot of interest from advertisers in upfront negotiations for 2025-26, and we exceeded our own expectations for upfront commitments with significant growth across the board. Finally, we're continuing to innovate for advertisers with AI. For example, in September, we announced an agentic AI tool in Creative Studio that plans and executes the entire creative process in a matter of hours instead of weeks. We're also inventing and seeing strong momentum in several other areas, and I'll mention just a few. In Prime Video Live Sports, NBA on Prime tipped off last week, and our opening night doubleheader averaged 1.25 million viewers in the U.S., a double-digit increase over last season on cable. You'll see us bring the same constant innovation here that we brought to our NFL broadcasts. We're adding golf with the Masters in 2026 and a new skins competition with the PGA Tour on Black Friday this year. And we've added Peacock and Fox One to Prime Video's add-on subscription offering of over 100 channels in the U.S. We continue to be energized by the response to Alexa Plus. Compared to what we call the classic Alexa experience, Alexa Plus customers are talking to Alexa 2 times more. Those interactions are much longer and they're covering a broader range of topics. They're using Alexa Plus on Fire TV at 2.5 times the rate of Classic, using natural conversation to discover audio content 4 times more, engaging with photos 4 times more, and customers are completing 4 times more shopping conversations that end in a purchase. We've expanded the number of Project Kuiper satellites in space to more than 150 and delivered over 1 gigabit per second speeds in tests with our enterprise-grade customer terminal, the first commercial phased array we know of to clear that threshold. Finally, Zoox robotaxis are available to riders in Las Vegas, and we've announced Washington, D.C. as the 8th testing location. We're excited for these to continue rolling out to more riders. Q4 is one of our busiest and most energizing times of the year, and we're excited about the continued demand for AWS, the innovations we'll announce at reInvent in December, the positive customer response to our AI-powered experiences, all the gifts we'll be delivering throughout the holiday season, and a lot more. Thanks in advance to our teammates around the world who are gearing up to deliver for customers once again. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Starting with our top-line financial results, worldwide revenue was $180.2 billion, a 12% increase year over year, excluding a 90 basis point favorable impact of foreign exchange. In Q3, we reported worldwide operating income of $17.4 billion. This operating income includes 2 special charges, which reduced operating income by $4.3 billion. The first charge of $2.5 billion is related to a legal settlement with the Federal Trade Commission, which impacts the North America segment and is recorded in the other operating expense line. The second charge of $1.8 billion relates to severance costs for role eliminations and impacts all 3 of our segments. The severance charge is recorded primarily in the technology and infrastructure, sales and marketing, and general and administrative expense line items. Excluding these 2 charges, worldwide operating income would have been $21.7 billion, or $1.2 billion above the high end of our guidance range. Moving to our segment results, we remain encouraged by the innovation our teams are delivering for customers across all 3 segments. In the North America segment, third quarter revenue was $106.3 billion, an increase of 11% year over year. International segment revenue was $40.9 billion, an increase of 10% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 11% year over year. We continue to prioritize the inputs that matter most to our customers. In the third quarter, our sharp pricing, broad selection, and fast delivery speeds continue to resonate with customers. Customers appreciate the ability to quickly receive items essential for their daily needs, including perishable groceries, and have them delivered in the same day. Our millions of global third-party sellers continue to be important contributors to our vast selection, which helps customers find the items they need at competitive prices. We're committed to building innovative services and features for our sellers, including our ongoing advancements in generative AI. Today, more than 1.3 million sellers have used our generative AI capabilities to more quickly launch high-quality listings. Better listings translate into better traction with customers, and in Q3, worldwide third-party seller unit mix was 62%, up 200 basis points from Q3 of last year. Shifting to profitability, North America segment operating income was $4.8 billion, with an operating margin of 4.5%. Excluding the $2.5 billion charge related to the legal settlement with the FTC, North America segment operating income would have been $7.3 billion with an operating margin of 6.9%. North America segment operating margin also includes a portion of the severance charge. International segment operating income was $1.2 billion with an operating margin of 2.9%. Excluding the impact of the severance charge, international segment operating margins expanded year over year. Globally, our progress on key inputs is delivering a better customer experience while driving a more efficient cost structure. For example, we're making notable strides in improving inventory placement to speed up delivery to customers. And as a result, for the third year in a row, we are on track to deliver our fastest speeds ever for Prime members in 2025. We continue to tune and improve our fulfillment operations, and our regionalized network is operating at scale. We see many benefits from our inbound process improvements, including a reduction of U.S. inbound lead time by nearly 4 days compared to last year. This allows us to be more efficient with our inventory purchasing, which benefits working capital. We're also placing inventory more strategically throughout the network. And by leveraging our existing infrastructure, we're now offering U.S. customers the ability to order perishable groceries and receive them the same day in as little as 5 hours. We're seeing positive early results. Since launching in January, when customers start shopping fresh groceries on Amazon, they are visiting the site more often and returning twice as often as non-perishable shoppers. Looking ahead, we see further opportunity to improve productivity in our global fulfillment and transportation network. We will continue to improve inventory placement to drive down distance traveled and touches per package. We will also build on the gains from our regionalized network through algorithmic improvements, as well as launching robotics and automation. While operating margin may fluctuate quarter to quarter, we have a deliberate approach to achieve sustained progress over the long term. Shifting to advertising. Advertising revenue was $17.7 billion, and growth accelerated for the third consecutive quarter. We continue to see strong growth on an increasingly large base as our full funnel advertising approach of connecting brands with customers is resonating. Moving next to our AWS segment, revenue was $33 billion, up 20.2% year over year. This is an acceleration of 270 basis points compared to last quarter, driven by strong growth across both our AI and core services and more capacity which has come online to support customer demand. AWS revenue increased $2.1 billion quarter over quarter and now has an annualized revenue run rate of $132 billion. AWS operating income was $11.4 billion and reflects our continued growth coupled with our focus on driving efficiencies across the business. We are expanding our data center footprint largely to accommodate Gen AI, and to the extent those assets were placed into service, the related depreciation does impact our margins. As we've long said, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we're making at any point in time. Now turning to our cash CapEx, which was $34.2 billion in Q3. We've now spent $89.9 billion so far this year. This primarily relates to AWS as we invest to support demand for AI and core services and in custom silicon like Trainium, as well as tech infrastructure to support our North America and international segments. We'll continue to make significant investments, especially in AI, as we believe it to be a massive opportunity with the potential for strong returns on invested capital over the long term. Additionally, we continue to invest in our fulfillment and transportation network to support the growth of the business, improve delivery speeds, and lower our cost to serve. These investments will support growth for many years to come. Looking ahead, we expect our full-year cash CapEx to be approximately $125 billion in 2025, and we expect that amount will increase in 2026. I'll finish up my remarks with net income. While we primarily focus our comments on operating income, our third quarter net income of $21.2 billion includes a pre-tax gain of $9.5 billion related to our investment in Anthropic. This investment activity is not related to Amazon's ongoing operations and is included in non-operating income. We're encouraged by the start of the peak season, and we are ready to serve customers in the coming months. I want to thank our teams across Amazon for their hard work as we get ready to delight customers during the holiday season. Our commitment to elevating the customer experience is the only reliable way to drive sustainable value for our shareholders. With that, let's move on to your questions.
Thank you. At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star one on your keypad. We ask that when you pose your question, you pick up your handsets to provide optimum sound quality. Once again, to initiate a question, please press star, then one on your touch-tone telephone at this time. Please hold while we poll for questions. And our first question comes from the line of Justin Post with Bank of America. Please proceed.
Great, thank you. I'll ask on AWS. Can you just kind of go through how you're feeling about your capacity levels and how capacity constrained you are right now? And then on your prepared remarks, you mentioned Trainium 3 demand and maybe broadening out your customer base. Can you talk about the demand you're seeing, outside of your major customers for Trainium? Thank you.
Yeah, on the capacity side, we brought in quite a bit of capacity, as I mentioned in my opening comments, 3.8 gigawatts of capacity in the last year, with another gigawatt plus coming in the fourth quarter, and we expect to double our overall capacity by the end of 2027. So we're bringing in quite a bit of capacity. Today, overall in the industry, maybe the bottleneck is power. I think at some point it may move to chips, but we're bringing in quite a bit of capacity, and as fast as we're bringing it in right now, we are monetizing it. And then on the Trainium demand outside of our major customers. So first of all, as I mentioned on Trainium 2, it's really doing well. It's fully subscribed on Trainium 2. We have, it's a multi-billion-dollar business at this point. It grew 150% quarter over quarter in revenue. And you see really big projects at scale now, like our project Rainier that we're doing with Anthropic, where they're running they're training the next version of Claude on top of Trainium 2 on 500,000 Trainium 2 chips, going to 1 million Trainium 2 chips by the end of the year. As I mentioned, we have today with Trainium 2, we have a small number of very large customers on it. But because Trainium is 30 to 40% more price performant than other options out there, and because as customers, as they start to contemplate broader scale of their production workloads, moving to being AI focused and using inference, they badly care about price performance. And so we have a lot of demand for Trainium. Trainium 3 should preview at the end of this year with much fuller volumes coming in the beginning of 26. We have a lot of customers, both very large and I'll call it medium size, who are quite interested in Trainium 3.
And the next question comes from the line of Brian Nowak with Morgan Stanley.
Thanks for taking my questions. Congrats on the quarter, guys. So maybe two. One, Andy, sort of a philosophical chip question. There's a lot of questions in the market about Trainium and sort of its positioning versus other third-party chips. So how do you think about the key hurdles with Trainium 3 you need to overcome to really make Trainium adoption broader, to your point on the last question, and continue to drive Trainium, as opposed to satisfying what could be broader demand with third-party chips in the near term?
Yeah, well, first of all, we're always going to have multiple chip options for our customers. It's been true in every major technology building block or component that we've had in AWS. Really, in the history of AWS, it's never just one player that over a long period of time has the entire market segment and can satisfy everybody's needs on every dimension. And so we have a very deep relationship with NVIDIA. We have for a very long time, and we will for as long as I can foresee the future. We buy a lot of NVIDIA. We are not constrained in any way in buying NVIDIA, and I expect that we'll continue to buy more NVIDIA both next year and in the future. But we're different from most technology companies in that we have our own very strong chip team, and this is our Annapurna team. And you saw it first on the CPU side with what we built with Graviton, which is about 40% better price performance than the other x86 processors. And you're seeing it again on the custom silicon on the AI side with Trainium, which is about the same amount of price performance benefit for customers relative to other GPU options. And our customers, to be able to use AI as expansively as they want, and remember, it's still relatively early days at this point, they're going to need better price performance, and they care about it deeply. And so, I mentioned earlier the momentum that Trainium 2 has, and I think that for us, as we think about Trainium 3, I expect Trainium 3 will be about 40% better than Trainium 2, and Trainium 2 is already very advantaged on price performance. So we have to, of course, deliver the chip. We have to deliver it in volumes and deliver it quickly. And we have to, continue to work on the software ecosystem, which gets better all the time. And as we have more proof points, like we have with Project Rainier, with what Anthropic is doing on Trainium 2, it builds increasing credibility for Trainium. And I think customers are very bullish about it. And I'm bullish about it as well.
And our next question comes from the line of Doug Anmuth with JP Morgan. Please proceed with your question.
Thanks for taking the question. I'll stick with basically the same topic, Andy. But can you just talk a little bit about the architecture of Project Rainier and how it's differentiated, and what that means for customers and for AWS? And do you expect Rainier to expand beyond Anthropic? And how do you replicate Rainier with Trainium 3 chips? Thank you.
Yeah, I think what is compelling for Anthropic around Project Rainier is, really is the Trainium 2 chip, which, we've built first of all, we built a very large cluster that they can use in a very expansive way. And it's not simple to be able to build a cluster that has 500,000 plus chips going to 1 million. That's an infrastructure feat that's hard to do at scale. And so, some piece of it is the infrastructure capabilities that we've built over a long period of time in AWS that is, unusual in the industry. But it's just also the performance of the chip and the price performance, which both of which matter. And I think that Project Rainier is something that is specific for Anthropic, but we have a lot of other customers who are interested in employing large clusters of Trainium chips that we're going to hopefully give them a chance to do so with Trainium 3.
And the next question comes from the line of Mark Mahaney with Evercore ISI. Please proceed with your question.
Thanks. I want to ask about two topics, groceries and then how to think about headcount in the future. And on groceries, the perishables, I think last quarter you talked about 70% or something of users had never purchased from perishables from Amazon before. Just talk about whether I think you used the term game changer before. Does this mean that maybe you no longer need to do Amazon Fresh stores? You always had this DVD, delivery van density advantage. And have you kind of reached a point, you think, of scale and speed that you really can change people's habit and really have them consider Amazon as one of their first grocery options? Do you really feel like you're at that point? And then secondly, just on the headcount, given some of the recent news, just talk to us about how you think about headcount going forward. Are you seeing is the level of efficiencies that you're getting from AI such that you can keep headcount relatively flattish for the foreseeable future? Just talk about the pros and cons or the wins and losses in terms of that headcount going forwards. Thank you.
Yeah, so I'll start with grocery, Mark. We have a very large grocery business. If you look at our entire grocery business, if I don't even count Whole Foods Market and Fresh, in the last 12 months, it's over $100 billion of gross merchandising sales, which would make us a top 3 grocery in the U.S. A good chunk of it is a lot of the items that you'd find in the middle aisles, so consumables and canned goods and pet food and health and beauty, very significant, that continues to grow at a very good clip. But then, we also have Whole Foods Market, which is the pioneer in organic foods, which is also growing at a faster clip than most grocery companies and with an attractive trajectory on profitability. And we'll expand our Whole Foods physical presence over the coming years here. And I'm also very excited about this new concept, Daily Shop, that we have, which is a smaller version of Whole Foods in urban settings, which we have 3 that we've launched that are off to very good starts that you should expect to see more of as well. Now, we have always been, as you referenced, we've talked a lot about having a larger mass physical presence. And we continue to experiment with various formats, but the one that we are most excited about is what you referenced, which is the ability to provide perishable groceries with same-day deliveries. And if you think about how many of our customers are buying from us multiple times a week and who are buying things like shampoo or detergent or paper cups or water, where the ability to add milk and eggs and yogurt and other perishables to their order and have it live in the same shopping cart and then show up a few hours later is very compelling. And we started with a few markets about a year ago, and we were really taken aback at the adoption, not just the number of people that started buying perishables from us very quickly, but how often they came back downstream to buy perishables and groceries from us in the future. And so we've now expanded that to 1,000 cities around the U.S. We'll be in 2,300 by the end of the year, and it's really changing the trajectory and the size of our grocery business. And I also believe that this many years tradition of the weekly stock up, grocery stock up, is changing, and I think we're a big part of that. And I think there's a lot of potential there for the grocery side. It doesn't mean that we won't continue to experiment with other physical formats, but we're on to something very significant with what we're doing with perishables from our same-day facilities. And then on your headcount question, what I would tell you is, the announcement that we made a few days ago was not really financially driven, and it's not even really AI driven. Not right now, at least. It's culture. And if you grow as fast as we did for several years, the size of businesses, the number of people, the number of locations, the types of businesses you're in, you end up with a lot more people than what you had before, and you end up with a lot more layers. And when that happens, sometimes without realizing it, you can weaken the ownership of the people that you have who are doing the actual work and who own most of the two-way door decisions, the ones that should be made quickly and right at the front line, and it can lead to slowing you down. And as a leadership team, we are committed to operating like the world's largest startup, and that means removing layers, it means increasing the amount of ownership that people have, and it means inventing and moving quickly. And I don't know if there's ever been a time in the history of Amazon or maybe business in general with the technology transformation happening right now, where it's important to be lean, it's important to be flat, and it's important to move fast. And that's what we're going to do.
And the next question comes from the line of Eric Sheridan with Goldman Sachs. Please proceed with your question.
Thanks so much for taking the question. Wanted to know, Andy, if you could reflect on the opportunity that's continuing to present itself in terms of rolling out more robotics and automation and the broader theme of physical AI across your operations, and how you should be thinking about that as a driver of potential efficiencies, but also as a driver of the ability to possibly reinvest back in the business over the long term. Thanks so much.
Robotics is a very substantial area of investment for us. We have over 1 million robots in our fulfillment network at this point. And I would say that while that's significant, we have a lot of invention in flight. So I expect that we'll have more over a period of time. Robotics are very important for us and for our customers and for our teammates because they improve safety, they boost productivity, they increase speed, and they let our human teammates focus on problem solving and what they do best. And we expect that our people will remain at the heart and the center of our fulfillment network, as they have from when we first started working on robotics. And we expect that over time we will have a fulfillment network where robots and humans complement each other and work together. But I think you're going to continue to see us invest very significantly in robotics. It's going to help on the safety, the productivity, the speed, and ultimately some of the cost pieces, which will allow us to continue to improve the customer experience.
And the next question comes from the line of John Blackledge with TD Cowen. Please proceed with your question.
Great. Thank you. How does Amazon think about agentic commerce going forward, and how do you think Amazon will serve customers using agents to purchase goods on Amazon in the future? Thank you.
I'm very excited about, and as a business, we're very excited about in the long term the prospect of agentic commerce, and it has a chance to be good for customers. It has a chance to be really good for e-commerce. And I think if you know what you want to buy, there are a few experiences that are better than coming to Amazon. But if you don't know what you want, it's a physical store with a physical salesperson still has some advantages. Obviously, lots of people do it on Amazon all the time, but you very often want to ask questions and get help narrowing what you're going to look for. And as you keep asking new questions, having a whole bunch of different options presented to you. And I think AI and agentic commerce are going to change the experience online, where that experience where you're narrowing what you want when you don't know is going to get better online than it even is in physical environments. Now, we obviously have our own efforts here in agentic commerce. We have Rufus, which I talked about in my opening comments, which is continuing to get better and better and used more broadly. And we have features like Buy For Me, where we will surface on Amazon even items that we don't stock that other merchants have. And then if customers want us to go and buy it for them on those merchants' websites, we will do that. And both of those have been successful for us. But we're also having conversations with and expect over time to partner with third-party agents. And I think that it reminds me in some ways of the beginning of search engines many years ago being sources of discovery for commerce. And, you had to kind of figure out the right way to work together. And today, search engines are a very small part of our referral traffic, and third-party agents are a very small subset of that. But I do think that we will find ways to partner. We have to find a way, though, that makes the customer experience good. Right now, I would say the customer experience is not good. There's no personalization. There's no shopping history. The delivery estimates are frequently wrong. The prices are often wrong. So we've got to find a way to make the customer experience better and have the right exchange of value. But I do think that the exciting part of this and the promise is that AI and agentic commerce solutions are going to expand the amount of shopping that happens online. And I think that's really good for customers, and I think it's really good for Amazon, because at the end of the day, you're going to buy from the outfit that allows you to have the broadest selection, great value, and continues to deliver for you very quickly and reliably. And I think that bodes well for us.
And our final question comes from the line of Colin Sebastian with Baird. Please proceed with your question.
Thanks. Good afternoon. I guess first on AWS, following up there, how much of this acceleration is driven by core infrastructure versus AI workload monetization? And I think part of it is trying to understand how important newer services like Agent Core are becoming in bringing enterprises to AWS to build agents. And then I guess secondly, regarding the acceleration in advertising, if you could potentially disaggregate the core advertising contribution versus DSP and Prime Video, that would be helpful as well. Thank you.
Yeah, I'll start on the AWS side. We are seeing, we're really pleased with the results from this quarter. 20% year over year on a annualized run rate of $132 billion is unusual. And we have momentum, and you can see it. And we see the growth in both our AI area, where we see it in inference We see it in training. We see it in the use of our Trainium custom silicon. Bedrock continues to grow really quickly. SageMaker continues to grow quickly. And, I think that the number of companies who are working on building agents is very significant. I do believe that a lot of the value that companies will realize over time in AI will come from agents. And I think that building agents today is still harder than it should be. You need tools to make it easier, which is why we built Strands, which is an open source capability that lets people build agents from any model that they can imagine. But even more so, when you talk to enterprises or companies that care a lot about security and scale, they're starting to build agents, and they don't really feel like they've had building blocks that allow them to have the type of secure, scalable agents that they need to bet their businesses and their customer experiences and their data on. And that was really the inspiration behind Agent Core, was to build another set of primitive building blocks like we built in the early days of AWS, where it was compute and storage and database. We defined a set of building blocks that you needed to be able to deploy agents securely and scalably that we provide in Agent Core. And then when we talk to our customers, it really resonates. There is not anything else like it. It's changing their time frame and their receptivity to building agents. And it's very compelling for them. So I do think, the combination of what we're doing to enable agents to be built and run securely and scalably, as well as some of the agents that we're building ourselves that our customers are excited about, are compelling for them. And, I think the other place we see a lot of growth in AWS also, is just the number of enterprises who've gotten back to moving from on-premises infrastructure to the cloud. And we continue to earn the lion's share of those transformations. And, I look at the momentum we have right now, and I believe that we can continue to grow at a clip like this for a while. I think on the advertising side, that is also an area where I think collectively we feel very pleased about the progress. Every single one of our advertising offerings this quarter grew in a meaningful way. I think there's a few things going on for us. We have what I think of as a pretty unusual full funnel offering. And if you look at the top of the funnel, which typically tends to be awareness building and broad scale, to be able to use our own, Prime Video and our live sports capabilities, as well as going all the way down to the bottom of the funnel at point of sale, being able to use sponsored products. That's, most people don't have a full funnel offering as robust as that. And then when you layer on top of it, the combination of the audience curation and development we can do, along with the advantage measurement, it just all leads to a return on advertising spend that's very unusual. And I think there are multiple places where we can expect to continue to grow. One is in our stores business. I still think, if you look at the worldwide market segment share of retail, still 80 to 85% of it lives in physical stores. And that equation is going to flip over time. And I think AI is going to only accelerate that. So I think we have a significant opportunity still in our existing stores. And then I think video, we've only been at this for a little bit of time, but it's already a very large amount of advertising revenue, and we're still relatively early stage. I think that will continue to be a big area of growth. And then as you reference, the their demand side platform, or Amazon DSP, that is growing really quickly as well. And some of it had to do with the fact that we had some features. We always had a number of the core components people wanted around some of our properties, the measurement capabilities, Amazon Marketing Cloud. But we lacked some features for a while as we were building out our DSP that customers told us mattered. And the team over the last 20 months have closed those gaps in a very significant way, so that now people feel like our DSP is fully featured. And then you look at some of the partnerships that we've done, the Roku partnership gives us the largest connected TV footprint in the U.S. And you layer on top of that what we've recently done in providing our DSP customers the opportunity to integrate with the ad inventory in Netflix and in Spotify and in SiriusXM. You know, it's powerful, and so we are growing very quickly on the demand side platform. So very optimistic about what we're doing there. We've continued work to do, obviously, but I don't think we're close to being able to grow there.
Thanks for joining us on the call today and for your questions. A replay will be available on our investor relations website for at least 3 months.
Okay, sorry, I didn't realize I was muted. There will be a replay of this call forever on this YouTube channel, so you don't need to worry about capturing that 3-month timeline. That said, my commentary on Amazon stock and eventually getting around to Reddit as well, which is now up 7.8%, maybe dropping a little bit now. I don't know if the earnings are still going on, if we can catch the back end of that or whatever, but overall it looks like the market has enjoyed what they've been saying for sure. I have not been able to get too many details on Reddit. I was trying to while listening to this Amazon call. On Apple, really quick, they said that the slowdown in the Greater China revenue this quarter was mainly due to supply constraints delaying iPhone shipments. Tim Cook also added that Apple expects to return to growth in China this quarter as supply improves, however, not predicting when they will be in balance. Okay. Another comment on Siri. They also said that they're making really good progress on their upgrade version of Siri, but they will release it next year. It's not going to be coming just yet. Amazon, yeah, I mean, we just listened to the call, but overall, Amazon's investment into their capital expenditures is looking really, really good, and they still expect another $125 billion in 2025, and that number will increase in 2026. Crazy. They're going to spend $125 billion this year. Absolutely nuts. Their own custom silicon seems to be going well. I think they're overstating just how well it's going. However, that said, they said it increased 150% quarter over quarter for where was it? Where was the exact quote? Where was the Trainium 2 quote with was it here? Trainium 2 continues to see strong adoption. It's fully subscribed and now a multi-billion-dollar business that grew 150% quarter over quarter. Yeah, I mean, it's crazy. That's awesome. There's just so much unbelievable demand. And Amazon's always going to be a big player here. And the fact that they ended up getting disrespected allowed people to buy into a company that shouldn't have been sold off in the first place, down to $211 this year. I was buying shares up like crazy under the $220 range. I just, from everything that I've been saying, if you guys follow the channel, I've been talking about this almost every episode that we do on our daily live streams. But just that it looks like Amazon's going to do very well. And now they're at the fastest growth rate that they've been on AWS in the last 8 quarters. 20+% year over year. Not at the same growth rate of Azure and GCP, but like Andy Jassy said in the call, like it's very, very different scaling at this level of growth at our size versus their tiny sizes of their business. Like they are so much larger than Azure and GCP. Okay. They put out more capacity than any of those companies. 3.8 gigawatts. They're going to add another gigawatt of capacity in Q4 alone. That's pretty sweet. So overall, I'm a happy camper. ended up trading or buying Reddit shares just at 4 o'clock right before earnings came out. Gave me a little bit of a spook whenever it ended up dropping down to 178, but back at 210 now and made a little bit of profit. Amazon made good money on, up 13%. And then, yeah, BMNR also recovering just slightly in the after hours, up 4%. Zillow's up. Netflix is up on the idea that they are doing a 10-for-1 stock split. Very, very cool. I'm going to go find out more about Reddit and then get back to you guys. But until next time, really do appreciate all of your time. Make sure you guys check out the channel. We do a 7 p.m. 7 p.m. live stream every single day, along with videos that come out hopefully every day, and then coverage on all the big names through earnings as well. Really do appreciate your time. Bye for now.